Okay, everyone, just doing a sound check.
Okay, guys, so welcome back. You remember a couple of weeks ago I did
Sorry about that. Get started here in just a couple minutes. Thanks everyone for joining a little early tonight. Welcome everyone to the Kendall Report. It is Sunday night at 8 p.m. instead of the normal time that I usually come on. We know all about the clock changes this weekend. Well, we don't change our clock here. And to keep my schedule, I'm going to attempt to do everything at 8 p.m. now. I'm not going to get some of the updates Tuesday through Thursday night. I won't have the database updates until in the middle of the show, because they now finish at 6:30 my time instead of the normal 5:30, because I'm not on Pacific time any longer. So we'll see how it goes. If we have to make some adjustments, we'll see how it goes. So one other announcement before I get into tonight's show. The other thing is I did a Twitter survey talking about a live trading room, and the results were amazing. Like 430 people voted, 75% said that you are interested. Spent a lot of time this weekend looking at some different platforms and things. And I'm going to do another survey on Twitter, and the goal there will be to find out some of the things and some categories that you folks might be interested in. I think it's just moving this community to the next level. As you know, we've been an institutional firm for over 20 some years. We've got software, proprietary indicators that I developed back in the 80s. I've got all types of information. We have stock screens, all kinds of things that we do. And we're trying to get this all together in a cohesive presentation and be able to spend a lot of time with you folks so that we can really build out the community. And I'm pretty excited about this. Looks like a lot of folks are interested, and that's just a snapshot. So basically, I'm going to move forward with putting a project together, and I did find a couple platforms, and I'll talk to you about that when appropriate. So let's go ahead and get into, just real quick, if you want to find out about that, then you can sign up if you haven't already, the kendallreport.com, and there's just a little form there you can fill out exactly, give us your name, email, and so forth. And we don't abuse that list at all. In fact, we do very little mailing unless there is something going on. So you can sign up there, or make sure you just follow me on Twitter, and that's at Twitter at Portfolio Expert, no E in the expert. So just the X, right? So, okay, let's get into tonight's video. So Fairmount went on last week. There's a number of things that we finished on Friday. We got employment numbers were big. And then after the markets closed, we got the infrastructure deal and a lot of things to kind of unpack here. One of the things that's going to be in focus this week, before we go through a review of last week, let's just talk about a couple of things as we go forward. This week's going to be really focused on a couple of things, actually. The inflation numbers. The title that I put out tonight is just inflation, inflation, inflation. That's going to be all that most people are talking about. We're getting CPI and PPI out this week. We also have a bank holiday on Thursday. But there's just a lot of things here that we're going to have to really focus on to keep this, market looking, understanding what's going to be going on. Let's just talk a little bit about some of the reports coming out. Tuesday's PPI, so nothing tomorrow on Monday. So PPI is expected to show a 0.7. I'm going to talk a little bit about this tonight because I think this is what's going to be driving the markets going forward. There's a lot of metrics starting to show that maybe inflation is coming back in a little bit. The fact that it's stabilizing doesn't mean it's going to decline. I've got a couple of thoughts on that here in a minute. But we're going to get Wednesday, then we get the claims are going to come out early this week since the banks and some of the government offices are closed on Thursday for Labor Day. So you're going to see claims come in 260. They keep lowering the numbers. Expectations are still to keep getting some traction. Continuing claims came in at 2.1 million last week. Those are pretty good numbers, I'd have to admit. And so October ends up to be pretty good. We'll see if the thing that I've been talking about for a while is that the we're going to stall in the economy. Whether that happens or not, we'll see what's going on. There's a lot of things with mandates and everything like that going on, and I did see that some, uh, I believe it was even appellate level or higher, have ruled that the mandates may not be legal, and there's a lot of lawsuits and a lot of scrimmaging going on around that stuff. So maybe we won't get any of the disruptions in the economy. We're just going to have to pay attention, see what's going on here. So let's just talk a little bit. We had the Fed last week. We had a number of things that I think we need to focus on, and basically we got the same story from the Fed. Things are transitory but lasting longer than they expect, all that kind of stuff. But I had an interesting thought when I was doing some research this weekend, and that thought was, what if the inflation continues and they start to raise rates at some point, and that doesn't stop the inflation? That seems to be, the red pill for inflation, and it just may not be the case, because in past times when inflation came in, there weren't serious supply and demand issues like we're seeing right now. We've got lots of demand and supply is disrupted. We'll see what kind of things happen here, but it's possible that the Fed may have painted themselves right into the corner. And I'm not going to go through it tonight. I would suggest, though, if you want more ideas on this inflation, to go back and listen to the opening comments on last Sunday night, because I talked about how the Fed has already put in probably close to, when as we get to the end of taper, there's going to be about $7 trillion that need to flow into the economy. So that's just going to continue to trickle. That could be 2+ years of trickling into the economy, and that's going to keep, I think, these inflation numbers a little hotter than a lot of folks expect. We'll see how that plays out. The good news is, I've been telling you for over a year, that the S&P and the stock market and equity markets are going to be the place as an inflation hedge, right? Those are going to be the things that is going to a good place to hide out, because it's all this pricing power is coming in. And boy, there's so much I could talk about tonight. It's incredible. Just done research this weekend was pretty intense with some things I looked at. But one of the things that is not happening in the economy or in this pricing model is we're seeing things like the BDI, the Baltic index, starting to fall. We saw lumber just plummet from like 16 down to 500, 1600 to 500. We're seeing a lot of these commodities come back in. But what's not happening is the pricing or the discount in these wholesale market prices aren't making it into the economy. Otherwise, folks are keeping prices high. I've mentioned this a couple of times. I have a contractor buddy in the area that's a big contractor, and he says they see some discounts, but it's not flowing in. I think the same thing is likely to happen in other areas in the economy. That'll probably end up being somewhat of a theme as I go forward. So let's, one other thing before getting into details in tonight's video is this infrastructure bill. I think this thing is, we won't call it dead in the water, but I don't see it really having any immediate effects. It's there. We're going to start, the rhetoric's going to start to crank up around the debt ceiling. There's going to be this other $2+ trillion that they want to flow out into the economy. That's going to happen. There's going to be a lot more noise around all this stuff. But I looked at the bill, a couple of things like roads. I just want to review these numbers because there's a point. Roads, 110 billion. Rails, 66 billion. We've got public transportation, 39. We got power, 65. Airports, 25. If you folks have been overseas, especially in Asia, the airports are insane there. Our airports are junk. The other thing, we've got ports, 17 billion. Now we have a major issue with the ports, and 17 billion is what these geniuses came up with. And then, of course, climate resiliency, 50 billion. And, you know, as I look at these numbers here, it's like, who defines this stuff? You know, I just say this out loud because it appears that Biden's absolutely senile, has no idea what he's doing. I saw an interview with Pelosi, and she's even drunk or something's going on with her. And these are the people running the country. I just hope, this is not a political statement. I just hope we can find somebody younger than me to run this country. You know, all these people are in their left 70s and beyond, and it's just ridiculous, folks. We need to get better people in our government. So enough of that. But this is the kind of results you get when you have these people that probably have never built anything, and they're just trying to figure out who their constituents are and where they can spend money based on that. So there's even more yet, folks. Okay, so let's go back to the economy and the releases. Friday's jolts and U of M, University of Michigan sentiment. Don't see a big deal there. The last thing that we have 1,134 earnings reports coming out. And there's not, I mean, it's very mixed in who's reporting this week. On Monday, PayPal was a standout. Tuesday, Coinbase and Neo. Disney on Wednesday. AZN, AstraZeneca on Thursday. You know, those are the big standouts. There's plenty of companies in there that we're going to see, and so far we've seen this really robust numbers come out of all this stuff. So it's pretty amazing what the amount of information we had last week, what we're going to have this week, and I guess in consensus, I don't see anything to derail anything big. I think we're just going to get more of the types of things that we've seen last week. So let's go ahead and get into some of the other data here. Yeah, so let's get into the WaveTech database, and there's quite a bit of stuff that's going on right now that as far as the database is going. I talked about this a lot on Friday if you watched that video. And really what we're seeing here is it's rotating back in. It's very interesting. Let me zoom in on this screen. And the intermediate database was at 42.5, around that number, just rough numbers. We're now up to 48. And let me go over to this other screen. The daily has now moved in a level that I've talked about. It's at 52.49. So we're finally getting traction above that 50% level. This is going to be very interesting. And we look at what the output of the models were for this week. Bear with me 1 second here. There we go. If we look at the output, as I said, the daily is 52, the intermediate is 49, but we look at the intermediate models, 2,167 buy signals, 202 sell signals, basically a 10-to-1 ratio on buys versus sells. Daily had 1,166 symbols, 354 sell signals. So we had a very positive. You see over here on the right-hand side, it says bullish. So all of the ratios were bullish as we came into this week's run. So this was pretty impressive, and we're starting to see a rotation. And yes, I am aware that we're at an all-time new high. And like I said, what we were seeing as far as the database goes is what we were seeing was just a narrowing of the participation. I talked about that as we went through October. It narrowed down. We had a pretty strong October because October was up S&P 2%, NASDAQ up 3.1, Russell up 6.1, big time. We look at the year-to-date numbers, S&P 25.1, NASDAQ 23.9, and now Russell is at 23.4. So these are pretty substantial numbers for the month. And so what we saw though, we saw a bit of a broadening in the Russell as far as participation. Talked to you about that as we went through the month. And then we're also saw for the most part, the intermediate and the short-term databases were fairly narrow in the participation rate or the number of percent bullish. And we stayed right above that 42 on the intermediate. We dropped a bit below that number for early in the month, and then we saw the rebound of the daily database. So from a standpoint of looking at 16,376 symbols, we're starting to see a rotation back in, and I'll be talking to you about some of that rotation. Definitely a lot going into small and mid caps. That's the leadership that I've been talking to you about that you need to pay attention to, and we definitely got a lot of that. So let's go ahead and start to dig into some of these index charts and get through this whole spectrum of indicators that we need to look at as well as far as the PPMs go. Right now, the futures are off a bit. We're seeing some selling coming in. And I talked to you about something on Friday. Actually, it was Thursday and Friday. There was something that happened there. And you'll see these dots right here. There was a cycle high coming in. And this is going to be the key numbers to watch for. And we're already penetrating these. The low on Friday was 46.67. The low so far tonight has been 46.78. We have not penetrated. We take out 67. We're likely to see some rolling over of this chart. I don't see any major hiccups happening here. We're going to see it probably trade back into this 10-period moving average. Right now, the PPM1 is at a point. Let me bring that up here so you can see that. Is at a point 0.26, PPM2 0.31, and PPM3 accelerating as well up at 0.12. And anything over 0.25 is a trend. And that number right now on the 10-day moving average is 46.22, and it is rising about 10 handles per day. So I talked a little bit, somewhere around 46, 40 is maybe probably going to be the bottom. I don't think we can get down to 46 handle. We, down to low 46s. I think we'll hold into that range at 10-period moving average. Will probably hold, but there is a caution is that we're seeing PPM2 cross through its second derivative here. Oftentimes when that happens, the next time before we'll see a reacceleration of this uptrend is going to be when the 21-day moving average comes in play. And that number is right now going up about 14 handles per day. And it's way down at 45.24. So it's going to take the better part of this week to getting closer to this price action, and what we get over the next couple of days will tell us a lot about what's going on. I think, as I said, we've got the CPI and PPI coming out. Whether those end up to be major drags on the markets, we'll see how they set up and see what kind of trading day we have tomorrow. I should be able to come in with some pretty decent numbers there. But we look at the market grid for today. Right now we've traded below S1. I'm looking at S2, 46.71, R1, 46.99. We've printed 89 so far, so we should see an expansion of the ranges. That's something I'm looking for here as far as the day goes on. Let's go over to SPX. SPX is, just as I said, we have the cycle hitting there. We also had a cycle in the NASDAQ. All these cycles are hitting on Friday, which was interesting as we printed an ATH all-time new high. So these indicators, since we're not trading, will turn down. The PPM1 on SPX will turn down. And just looking at the expectations for tomorrow, S2 4680, that would be down about 17 handles. R1 4705 probably is going to be the range. What we've seen over the last couple of days, though, we've seen more of an expansion, S2, R2. A couple times we printed all the way RTX, R2, RTX. So there's plenty of volatility out there yet. But I think just with looking at the week, the way it's set up, there is a fair amount of news, but I think we'll get through this in probably finishing in a sideways pattern. Let's go and look at the weekly here. And I've been talking about these objectives on here from the standpoint of what's likely to occur, and a couple things here. There was a number that I talked about last week. Once we got up above 45.71, there was nothing above that market. Now we've got a new calculation here. 47.67 is the target, so that'll be a new resistance zone off of the Fibonacci indicator. This is on a weekly basis, so the next level above that is 49.54 to 5,000, and I really want to emphasize something here, that this market is a long ways from finishing any kind of top. And what I'm talking about on the daily charts is just a hesitation here, 2-3 days. Maybe it could grind all the way through the week. We'll see how it sets up. But these weekly charts are still generating new Fibonacci targets. We have robust trends that are underlying in this market. So there's just nothing here that's going to stop it. And now we're getting target zones above, once we get above 47.67, now we're looking at 49.54 to 5,000 handle on the S&P. And I remember, some of you been around for a while, you may remember some of my crazy rants when I used to do the 2.5-hour live streams that I went on to, talking about some really crazy numbers at 5,000. S&P is not going to be ridiculous in this pattern. And it's now we're getting actual calcs from the patterns. So the way these indicators work is there's a pattern recognition algorithm in there, and when it sees that, it will project out Fibonacci numbers. And you can look at a couple things here on this page. Let me go full screen so you can see this. You see these dots that were calculated. This goes back to video I did over a year ago. I talked about new Fibonacci projections have been rendered. And at that time, the high target was 46.05, and that goes back to October. We finally printed 46.05. Now the next targets after that, 51, 39, 54, 68. As we go through the pattern now, we start to see more recognition from the standpoint of what's unfolding here. And we got these new objectives, 45.71, and now we got some new numbers here, 47.67. That was the minimum number that was there before. And all of a sudden, the high target was, before this new calculation, was 47.68. Now we still have somewhat of a similar number, 47.67. So that's going to be your pivot from a Fibonacci viewpoint. You get above that, there's nothing in front of this thing for a couple hundred S&P points. So like I said, it's going to be interesting to see what happens here from the standpoint, but the downside is very limited from that viewpoint. Yeah, there's crazy numbers coming out on the NASDAQ, as you'll see here as well. So as we go through the NASDAQ, I'm not sure how long it's going to take me to get through this show tonight, but there's just a lot. Sunday nights are a big night. we'll get these all marked up. As soon as we finish, we'll have the timeline marked up so you can find out what I was talking about. But the NASDAQ down 57 handles right now. It also had that short-term cycle high come in. There's a couple dots on the screen here that you can see. You'll see right here, Friday was it. We're down a bit. We also got 2 days ago, we got an RTX sell signal, which suggests that we go sideways for a couple of days. My bet is that we're going to go sideways right into this 10-period moving average. You see, these are real-time calculations on the PPMs. We're at 0.50, 0.45, and 0.14, and I've talked about this as well as the underlying momentum and strength that's being indicated on the NASDAQ is much stronger than the S&P. So there's still a fair amount of leadership. You can see there when I talked about the year-to-date numbers, the NASDAQ is now caught up with the S&P, and the Russell's coming on strong as well, because even, even as we see these cycles come in, there's still that underlying trend that is much bigger than just a short-term cycle. These do not mean that there's some major high. We had a cycle come here in at 10.7, and we got a 4 or 5 day downward slope, and then we get a cycle low come in. So these things kind of come in and flow, and I think the interesting things on the NASDAQ is what's going on as far as the weekly charts go, because that's where the big trends are. I remember just talking about being in the 16,000 handle seemed ridiculous not that long ago. But if we look at the market grid for today's session, we're looking at the low so far 16,256, S2 16,249. So we printed S2. Maybe we can see S3, R1. The high so far 16,334. So fairly close to an R1, but I do see potential for a bias to the downside today, not because it's down right now, just the overall patterns, the cycle that came in. And the same thing within the S&P, the 10-period moving average rising underneath the NASDAQ is going to be the dominant, and it's going up 100, about 75 handles per day. So that is going to be the underlying, and we're 2 to 3 days for all this to come in play as far as the support levels come. The weekly chart, though, this is very interesting. There's a new calculation that came in, and it is suggesting right now high target minimum 17,172. Next numbers 18,243, 18,905. These are really big numbers. I know you folks know this, and that doesn't mean because there's being projected that it is going to be hit. But these momentum numbers and the underlying trend, I talk to you folks all the time. I'm not going to go through a rant on this, but this angle of attack is very relevant and very strong as these markets unfold here. I think I'm going to venture into, on the NASDAQ, into a monthly trend, and there's no new monthly trends there, but the PPMs are in that momentum, what I call the trend maintenance mode, where they're in a very long-term secular bull market. And sometimes I quoted Ralph Elliott the other day on a video, and one of the hardest things you have to do when you're an analyst, you've been doing this stuff a long time, is believing what you're seeing, right? And there's some incredible. There's no Fibonacci targets right now on this market, but the angle of attack is huge. It's monthly. We're looking at probably a continued bull market, for a while. I mean, it's really hard to estimate at this level, but it's not going to go down at any major move down where there's going to be a crash unless there was some kind of, the only thing that would do that, and I'll put this out there, is if there was a war, Taiwan got invaded, something that big happened, then that would disrupt the world. I don't believe that's going to happen. But these trends on these monthly, I could bring up all these indexes, and they're absolutely insane from the standpoint of the underlying strength that exists in here. You folks know, been doing this, 41 years, and I've seen some strong markets. I've never seen anything like this, and it has everything to do with what I talked about last Sunday night about that Fed, that bathtub, that $7 trillion that's stored up that still has to trickle into the economy. And that stuff is just going to keep driving this thing forever. So all of this stuff, the next level of the government spending, they're trying to do this social spending and spending, I think, like $200 billion on childcare. I forget the numbers, so don't quote me on this. Don't troll me on these numbers. But they're trying to put all this money out there, and if they come anywhere close to these numbers, they get it over $1 trillion out just now. That's the spending that has to be done of the $7 trillion the Fed has in. Then the spending has to be done. So they just spent $1 trillion. There's still $6 trillion to be spent. And the money that's being created, been talking about this for over a year and a half now, is the Fed, once from going back to March 9th of 2020, I was saying then is that the Fed needs a partner in this game, which is fiscal spending. And lo and behold, Biden wins, and they get what I used to call the fairy godmother. Now I call her the evil witch of the West, and which is Janet Yellen, and she wants to just spend the money like crazy. They're now telling you spending all this money is going to cause inflation to go down. So the inflation is going to be here. All of these trends are going to continue for a while. This is your inflation hedge, and they are doing all this in effort to lower the equity and make the world more fair. It's never been more unfair than what they're doing right now, because the people with money, those of us who are watching this channel and participating in these markets, are who's going to benefit. And that's just the bottom line here. And when I see trends like this, I talk a lot about this off and on. Sorry to be on several rants tonight. There's just a lot of things to talk about. But the bottom line is, when you see these kind of things happening, these are mega trends. These are not something lightly. And it doesn't matter who's in the White House. It doesn't matter any of that stuff. But the money, it does matter that the Fed's printed this money. They can taper all day. They could probably raise rates and nothing would shake this thing at the moment. So as we go forward, I'll be able to maybe get a better vision or view into what's going in. So sometimes I just need to go into some of those rants to unpack them. So let's go ahead and let's go into the Russell. We'll go to Russell Cash. I'll just leave it here on the monthly. I'll go full screen here. So as we look at the Russell, it's just poking all the way through the highs, all-time new highs. We're printing up for the month already. We're printing at the RTX level, which is right now, this is monthly Russell Cash, 2447. The high's been 2449. So we're already printing up. But you can see that angle of attack. Everything I've been talking about, if I move this chart over, because I'm kind of stuck here on the monthly, I'm going to draw in something. I'm kind of on a little bit of a roll here on this longer term trend. But these angle of attacks, these are the moving averages. These are the mega trends that I'm talking about. So in spite of new taxes, new constraints on business, new everything, there's so much money, it actually won't matter, it looks like. So we'll see if this thing gets derailed anyway. But this is that rising 10 pattern, and I talk a lot about. This is also what's going on here is very significant. I'm just going to draw in a few things here. And I talk a lot about the trend maintenance mode. This is what these indicators do. They're not for, in certain points in time, they're not for looking at divergences and things of that sort. But we get into this angle of attack. It just has to maintain a certain level of angle of attack, and these markets will just keep going. So this is incredibly bullish long term. Let's go to the weekly pattern on the Russell. Here we are. We did get an RTX sell signal on the Russell on Friday. So that says roughly 2 weeks sideways, 1 to 2 weeks sideways. The range that we look at this week, we're trading 24.37 on Friday's close. We're looking at maybe an R2 23.92. R3 would not be likely, probably trading at least this week. R1, R2 on a weekly basis. So that is definitely what is likely to happen here. Let's go ahead and let's take a look at these charts here from the spread. We still haven't broke out on this pair yet. That we're just really starting to go. The NASDAQ, even though we had a 6 to 2 run on the spread last month, meaning that the Russell was up 6.1 and the NASDAQ actually was 6 to 3. NASDAQ was up 3.1. So we're still not out. We are outperforming, but the NASDAQ is strong enough that it's kind of hanging on to its leadership a bit. And I think that's going to be an interesting pattern to watch. I've talked about it. We get above this high here, which was back in October. We get above that high, then things are going to be in a position to really start to get more traction on this situation as far as the the spreads go and that leadership change that we're talking about. So as much as I hate to admit it, we're midway, so I just want to come up and tell you what the plan is for the rest of this broadcast will be to cover, we're going to go through the 10-year an interest rate scenario, then we'll do crude oil, gold, which I'm excited because it actually did something I've been talking about for months. I'm really excited about that. And then we'll do Bitcoin and we'll call it quits tonight. So everybody, thanks for hanging out and listening to me go into multiple rants. It seems to be necessary tonight. I did a lot of research this weekend and I'm just sharing those thoughts with you that I came up with. So let's go ahead and start to dig into this move. We saw a pretty good move. We printed down to 1.45. I've been on the 10-year. I've been talking about that. And what we're seeing here is it's trading down into major support. The PPMs, this weekly 10-year chart, we're right into that support level. I talked about the potential 142 being the extreme in this pattern. And so we definitely under pressure there after last week. So we'll see what types of thing we get out of the CPI and the PPI and what kind of effects. My expectation, if we go over to the daily, look at the short term, we're trading right on the 200-day moving average of this. But look at these PPMs. I mean, there's some serious downtrends been forming here on a short-term basis. So we're going to have to look at these charts and try to figure out if the weekly will be dominant in these trends or whether there's going to be challenges. As you look at this, there was a cycle that ended up being a cycle high on 11.3 just a few sessions ago. And we took out that low and that reversal day, which was 153. Once we took that out, here we are printing down into this 200-day We should be pretty close to the bottom here, but look at the market grid for today. We're looking at 141, 139 is coming into play potentially here. But the point here is that these PPMs are in massive downtrend. They're in trend mode. 1.28, which tells you the major resistance 1.56 right now. It's dropping about 1.5 basis points per day. On PPM2 is at minus 0.35. That just a monster wall around 158, 159 on the upside. And like I said, the 200-day is in play, but more importantly, those weekly averages I just showed you. Here's one of the things that I've been talking about, the 1030 spread, trying to steepen a little bit. If we go over here to the 530s, same thing, they're trying to steepen. The Fed needs this thing to kind of get up into like over 1% on the 530s. And I don't think there was even much movement in this is a 13-week versus a 5. There's a little bit of steepening going on there, but this is going to be important ratios to follow as we go forward. So all of these spreads, looking at what's going on there, is going to be important, I think, as we go forward. And I think the rates should bottom. I just kind of laid out 140 is about the absolute extreme, it looks like at the moment. So I'll look for some stabilization, talk about that as we go forward. That should be an interesting scenario. All right, so let's go to crude oil. I talked about last week the crude getting down around 80 and a half, 79 and change. We printed down, looks like Thursday we printed down to 78.25. We got a reversal next day. Now we're back into the resistance on this chart here, which is right at 82.50. We're trading right there. I expect really just a sideways range on crude. We should stay above that 78, 79 level on the downside, and on the upside, we're pretty much close to that 82.50. We look at the market grid. I'll bring that up on screen here. The market grid is suggesting that 82.17, we're above R1, so R2, 83.17 on the downside, probably S2, 79.37. PPMs are trying to stabilize here and turn back up. So it's going to be interesting what happens over the next several days. All right, let's get into gold next. This is daily gold. We had a really nice reversal on Friday. Monster move up over 1800. I've been rattling on getting back above this 200-day moving average. And now we got targets to talk about on gold. And the minimum target that we're going to be looking at is for a move to 1853 is going to be the next target. And then above that, we're looking at 1900 and much higher numbers. The key is going to be here is we still need to get these averages turning up. We still need some more positive underlying pressure as far as the gold goes on a short-term basis. But here's the chart that I've been rattling on about. And what I was expecting to happen here has happened. And PPM2 has turned up to its first, second derivative. PPM1 has not turned up as much as I'd like to see, but 3 is up. And now we've got some new weekly objectives here as well. Is what we're really looking at is the high target 1, 1880, 1940. So 1856 to 1880 is going to be the next stopping point. The critical levels to watch on the downside will actually be, we look at just the weekly grid here, is going to be down at 1790, and below that is 1776. I don't think 1790 will be absolute bottom. 1804 is also major support. Now that we're back above the 1800 level, those numbers are going to be good. If you remember talking about 1795, 1803, 1804, those are all now support numbers that need to hold, and we just need some more action. What I told you, within 2 weeks we'd start to see what we're seeing right now. A couple of weeks ago, and here it is, it's right on us. So I would continue to look for gold to move up into those ranges I just talked about. I think you're going, you're going to see some pretty amazing things in gold. Okay, so final market we'll go through here is going to be Bitcoin. Bitcoin is I've been telling you how bullish we're coming into a weekly close here. I'll go full screen here in a minute. We're trading right now 65,048 up 3702 tonight, and this thing is on its way over the next, I don't know, it's hard to put a time on it, but I'll do a Dr. Given. It's going to at least 85,000 very soon, and there's just so much energy in this market right now. It's absolutely insane. So as we look at PPM1 is turning back up. It's up plus 3.27, plus PPM2 2.74, PPM3 1.67. One of the things, we're very close to something happening. It won't happen this. Let me just look at something real quick. It could happen. This chart updates. It's Sunday, so at midnight Eastern time, it will update. There'll be some new numbers out. So if you're a Market Grid subscriber, you'll have all the weekly numbers that come out for this coming week tomorrow night. But as far as this pattern goes right now, we're looking at the upward band of this week as we're really close to it, 65,554. We've had a high of 65,646. We traded right there at the R3 level. RTX is 67,280. That's not going to come into play, but we did manage to hit R3. I knew we would get at least an R2 out of this thing, and now we're seeing it move up. So this next pattern that's unfolding here, that I've talked about this mini dragon head, they resolve themselves to the upside. So it looks like we're going to get some serious acceleration here. We're going weekly now, going to daily. And I talked about these numbers. Now daily's blowing out of its range again, which suggests if we stay up here to midnight Eastern, we're going to see a couple of days sideways of hesitation, not a lot of downside. The other thing that's likely to happen now, over the last 3 sessions, the ranges have been pretty narrow. We should start to see volatility increase. We'll start to see a lot of things happen here. PPM1 on a daily, 0.70, 0.54, and 1.04. So the angle of attack is in place. Everything's in place. And then these dots up above, these are new objectives, just came out 4 sessions ago. And they're for a minimum move, 85, 348. There's a cluster right there at 85. Then 90, 95.7 to 102. But 95 is probably a 60+%. The 85 number is a 60% plus probability of getting to that level. So this will complete the show for tonight. I really appreciate everybody. Don't forget, if you're interested in the live trading rooms and some other things we're going to do, there's going to be courses, all kinds of stuff, and it's going to be educational and trading, and we're probably going to do equities and indexes and other things that we're putting. I worked a lot on some proposed schedule and how I'm going to be able to participate in these things and do this. So thanks again for watching. I know I went in a lot of rants tonight. Hopefully you found it interesting. And if you're not a subscriber, make sure you subscribe, hit the bell, and go to the KindleReport.com for any of the, to get signed up so you can find out about any of these offerings, or follow me on Twitter at Portfolio, and that's an expert, no E, expert, and look forward to talking to you folks tomorrow night. Thanks again for joining me.